Hey everyone, Zach Gilbert from eXp Realty New Jersey. Haven't put out a video in a couple weeks. Really the main reason behind that was as the market has been shifting, I really wanted to look at the data. And I didn't want to make a rush to judgment on what was happening. And I really wanted to see the data. I wanted to talk to homeowners because I cold call a lot. I talk to homeowners, I talk to buyers, and I need to understand where the market is, where it's heading, and what's going on. There's a lot of clickbait out there. There's a lot of misinformation. As always, try to do this under 4 or 5 minutes. That way I don't take up a lot of your time. So let's just get into it. What is the shifting market that we're in right now? Well, let me just give you some examples. Mountainside, New Jersey, a town that I work in. The median sales price in July of 2022 was $845,000. In July of 21, it was $845,000. It's a very, very stable price. You go in the Scotch Plains, New Jersey, $699,000 was the median sales price in July of 2021. This year, in July of 22, the median sales price was $690,000. Fairly stable. It's nominal. That's a negotiation that you do on an inspection for a home. $9,000, that's nothing for a home. So we're seeing a lot of price appreciation slowdown. Everyone is talking about and thinking about 2008, that we're in that massive correction coming, massive job loss coming. Listen, if we're going to have prices fall drastically and a massive, massive market correction, we need for that to happen. Not saying that I want it to happen. We don't want it to happen. But if that were to happen, what we would need is a massive amount of job loss like we had in 2008. That is why home prices fell so significantly. Tons of people got laid off. They couldn't meet their mortgage obligations and they couldn't pay their bills. So a ton of homes at the market, more homes available than there are people to buy, supply exceeds demand, prices fall, right? In today's environment, yes, we're going to experience a recession. I mean, I anticipate that. I think everyone anticipates that. We would need a ton of job layoffs and job loss and a ton of people not meeting their financial obligations to really get to that market. I really don't foresee that happening. I don't think really any major economist foresees that happening. We're just going to see more of a slowdown, like we see with the Mountainside data as an example, and the Scotch Plains data, more of a leveling off of prices. So as a buyer, this is the normal market. I would anticipate and I would tell you and I would advise you, hey, we're not going to see massive price growth. If a home is for sale for $690 today, it might sit on the market 30, 45 days, and it might sell at $685 or $695. That's what I think. I don't think we're really going to see what we saw the last 2 years where a home is listed for $799 and sold for $905. I just listed a home like that in West Orange. That was back in May. I think over the last 2 months, we've seen some shift. And I really think over the next 8 to 10 months, we're really going to see prices just flatten off and plateau. Maybe in some cases, a little bit of decline. Maybe in some cases with the right home, with the right property, in the right location, the right marketing, you're going to see, major offers coming in. But I think for the most part, for the buyers out there, this is going to be the new normal. For sellers, where your home's worth today, 2, 3, 4, 5% growth over the year. That's about it. I wouldn't anticipate 10, 12, 15% growth, 20% growth, 30% growth in some cases on appreciation. With the market, with the recession, it's just going to stabilize prices. So if you want to buy a home, anticipate the market settling down a little bit. You can kind of take a breath for the most part, depending where you're looking. And you might be able to take an extra weekend or so looking at homes. Not going to always be the case, but it's going to be the case more often than it was over the last 2 years. If you're a seller, we're going to have to start going back to some of the basic fundamentals to sell your property. What we mean by that is making sure the house is cleaned up, making sure the house is prepared to show, staging the home in some situations, making sure the landscaping looks nice. Those little steps will really help add a ton of value and make sure the home doesn't sit for more than 45 days, 60 days. I think that's just really what we're going to have to go back to, is a more normal situation. So as we transition into this shift, I do not anticipate a massive fall off. I would not anticipate a massive correction unless hundreds of thousands of people lose their jobs, in which case, yes, of course, that would happen. But I just don't foresee that happening. I think our economy is too strong. The dollar is too strong, compared to the world economics. The United States is doing pretty well overall. So if you have any questions, feel free to reach out, shoot me a message, leave a comment, let me know I can help. Thanks so much.